Something massive is happening in India's financial system. Billions of dollars and rupees are moving in silently, faster than we've ever seen before. And almost nobody has connected the dots yet. Because three stories, an NSE F&O shake-up, a 21,700 crore rupees LIC buying frenzy, and a shocking Vodafone twist, all hit the market at the exact same time. And just when everyone thought it was over, Japan quietly made a $4 billion move toward India, a move experts say could create a potential 10x opportunity. But the real shock isn't the money flowing in. It's the hidden reason behind why it's happening. And once you hear it, your entire view of the market will change. If you got value from everyday market update, make sure to hit like, subscribe and turn on the notification. Tomorrow's video will make even more sense when you follow these updates daily. NSE just made a major change in the F&O segment, a change that will directly affect traders, volatility, and even your favorite option strategies. This isn't a small policy tweak, this is a structural shift. And while traders are still trying to understand this move, LIC stepped in and bought 21,700 crore rupees worth of stocks. That too, quietly. Smart money never announces. Smart money just moves. And here's something most investors never realize. People lose money not because the market is risky, but because they follow random videos, weak thumbnails, confusing titles, and they never stick to one niche or one strategy. But if LIC is buying aggressively, and NSE is changing the rules, what happens to Vodafone, the company suddenly hit by a $6 billion twist and a 7,500 crore rupees attachment? The answer is shocking. Vodafone is suddenly in the spotlight after a massive $6 billion deal twist that nobody saw coming. And the timing, extremely suspicious, because just as the deal surfaced, something even bigger happened. The Enforcement Directorate attached 7,500 crore rupees worth of assets connected to the case, freezing operations, choking liquidity, and sending a message that the fight isn't over. And this shockwave didn't stay limited to Vodafone. The entire telecom sentiment shook for a moment, before stabilizing again. Because smart investors immediately understood what this really means. But here's the twist. While Vodafone is battling storms, Japan quietly entered India with a $4 billion bet. And one stock linked to that move could potentially 10x. While the world was distracted by volatility, Japan quietly made a $4 billion bet on India, not in speculation, but in long-term infrastructure, technology, and manufacturing. This wasn't a normal investment meeting. This was a strategic handshake, a message that Japan sees India not as a market, but as the growth engine for the next decade. And here's where it gets even more interesting. Several Japanese funds are circling around one particular sector, and one stock in that sector has the potential to deliver massive multi-year returns. Before I reveal what this 10x sector is, you need to understand why global giants are suddenly chasing Indian opportunities like never before. The next scene will make everything crystal clear. So what does all this mean for the market right now? Nifty and sensex reacted sharply to these three major events, but surprisingly, the market showed resilience. This tells us that big money already expected these shocks. So if you found value in this breakdown, don't forget to support the channel, hit like, drop a comment, and make sure you subscribe so you never miss a crucial update. When you combine the F&O rule change, LIC's massive buying, and Vodafone's legal pressure, you start to see one pattern: institutions are repositioning. They're tightening risk, preparing liquidity, and shifting holdings into safer sectors. So for tomorrow, keep an eye on telecom for volatility, banking because LIC's buying often signals institutional confidence, and infra stocks because of fresh foreign interest. These could show clear trends as the market digests today's shocks. But tomorrow isn't the end. A new set of economic numbers and global cues is coming, and it could shift the entire sentiment again.